You mark too many support and resistance using line on the chart. You wait for the price to come to the area and show sign of rejection, but the price leaves before touching the area. Then, you adjust the level. This time, market come to your area. You take the entry, but market hit your stop loss, take you out of the market, and continue in the original direction. Well, most of the traders face the same issue while trading support and resistance areas on the chart. Today in this video, I am going to teach you 5 important rules that you have to keep in your mind when drawing support and resistance areas. Watch this video till end because I have revealed important secrets of drawing important levels that very few traders know. So, let's see how to draw areas perfectly. First of all, always use box to draw support and resistance because support or resistance is an area on the chart, not the point or line. Take market as a train, although the train stop on station, but it does not always stop at the exact same place. So, if price is like a train and we want to ride on it, then we should treat support and resistance areas as zones instead of points. So, always mark them as area with box instead of marking as level or point on chart with the line. Second point. Remember, try to cover as many points as possible when drawing important levels on the chart. Try to cover both the bodies and the wicks. But remember to give more preference to bodies. Don't draw the area too wide because it will confuse you. It should be neither too wide nor too narrow. If you make it too wide, then it will confuse you when you will shift down to lower time frame, and if you make it too narrow, then you will end up taking wrong trades. After doing practice, you will become experienced and find it way easier to draw the important key levels on the chart. Third point. When drawing support and resistance areas, give more importance to recently created areas. These are called fresh areas and have more chance of price reversing from such areas. If the area is tested multiple times in very short period, then avoid taking trades from that area because area becomes weak when tested multiple times in very short period. Point number 4. Not all support and resistance areas are equal. Support and resistance areas from the higher time frames hold more weight and value. Swing highs and swing lows from the higher frames become support and resistance areas on the lower time frames. If you want to draw strong support or resistance area, then mark the areas on the chart at least one time frame higher. For example, if you want to trade on 1 hour, then mark the areas or for our chart because these areas carry more weight. Higher time frame meaning more people watch the area. And when most people participate in area, then price move in certain direction quickly. Even a small reaction on the higher time frame is huge move on the smaller time frames. Point number 5. Keep the trend in mind while marking zones because trend act as the holy grail when trading using support and resistance. When the support is broken, then it becomes resistance, and when resistance is broken, then it becomes support. When the price is in the uptrend, then don't take a sell just because price is at the resistance, because in uptrend, price react to resistance, then break it and it retested as support. When resistance turns into support, then it is the perfect opportunity for you to take the trade because you trade with the trend and it act as biggest confluence in your favor. Similarly, you should not buy just because price has reacted after reaching the support level. In downtrend, you wait for the price show reaction from the level, break it to the downside, and then you take the trade in the direction of trend, which make it a very high probability trading setup. Here is the bonus pro tip for you. If to resistance or to support areas are very close to each other, then look left and confirm your zone. Mark the area from where the price reacted before. Sometimes, price just break out of a zone and come back into it. So, be careful when taking this kind reaction from the area into account. If you can't find a clear zone to take trades from, then it is better to stay away from the market. Just wait patiently for another opportunity. Here are 3 key rules to identify strong support and resistance areas. First, area from where the uptrend or downtrend started are the strongest areas because these areas have the ability to change the trend direction. Second, areas that are visible on multiple time frames are more powerful. Check if the area is equally visible on multiple time frames and make sure to choose most obvious areas from higher time frames. Third, never ever jump into the trade. Observe the movement of price when it reach at the area. If the price don't move much in short time after touching the area, then area is not that strong and more likely to break. But if the price rejects violently leaving wicks behind, then the area is powerful and you can think about taking trade according to your strategy. If you will follow all the rules described in this video, then you will surely get success in your trading. I hope you have learned something new and valuable from this video. So, please consider liking this video and see you guys in another video like this.